Here, let's continue using EVs. After the company announced pricing reductions for the Model S and Model X in China, Tesla's stock is declining once more today. Following a price reduction for the Model 3 and Model Y, the corporation made this move. Investors are speculating that the stock may drop even further. Kevin Kelly, CEO of Kelly Intelligence, joins us today to discuss these moves in more detail. Kevin. Hello, Melissa. As of today, there were 1.06 times as many puts exchanged as calls, and the tendency continued to grow. The largest contracts traded today were at the money puts, ahead of Friday's options expiration. To be more precise, 108,000 of the 118,000 puts that were exchanged were for the $225 strike that expires this Friday. At the conclusion of the day, their trading price was $3. Indeed, the recent decline in Tesla stock should worry any investor. But it's crucial to keep in mind that Tesla is subject to stock market volatility, just like any other stock. Although supporters of Tesla and investors anticipate that the stock will rise further, this may not always be the case. Although there might be good reasons to sell Tesla stock, we don't think doing so would be highly rewarding in the long run. Tesla has a bright future ahead of it thanks to its strong manufacturing capabilities, business alliances, and ongoing technological improvements. Although the journey may appear difficult, there are a lot of possible benefits. As seasoned investors, we search for opportunities to follow Tesla's remarkable rise. Let's examine Tesla's stock, which is currently down roughly 2.5% following more price reductions in China. In China, the manufacturer of electric vehicles reduced the cost of the Model S and Model X by approximately 7%. This takes place in a challenging economic environment. Shauna, consider what's been going on in China. We discussed this yesterday, and the most recent economic data indicates that the market is still weakening. These price reductions reflect the fierce competition in the market, which was highlighted when Tesla and 15 other automakers signed a letter promising not to compete under unfair pricing. Chinese competitors of Tesla have also been lowering their pricing. According to Tom Narayan of RBC, there is undue worry about the price reductions because, in the end, a company benefits from increased volume even at lower margins. Elon Musk seems to see it this way, as seen by his continued commitment to these price reductions while leaving room for more. Regarding demand, especially in China, the extremely sluggish recovery and unsatisfactory economic statistics over the last few weeks undoubtedly portray a difficult picture for Tesla and its local rivals. Many investors are still purchasing Tesla shares in spite of the decline because they see it as a buying opportunity. Due to its reputation as the company of the century, Tesla holds the top spots both with other investors and in the fund managed by ARK Invest. Few investors are aware of this and are purchasing shares in large quantities. Welcome back to Tesla Hype, everyone. The stock performance of Tesla has been outstanding, drawing in a diverse group of investors who are confident in the company's prospects for long-term growth. It takes conviction to remain bullish on Tesla stock at this time, given the recent decline in the price of the stock, but doing so is recommended for the following reasons. Tesla faced both difficult and exciting occurrences in the last year, which had an impact on the company's growth and stock price. We will learn more about the many unanswered questions in this video. Before we begin, though, please be sure to subscribe, press the like button, and enable post alerts if you want to be informed about all things Tesla. Although a lot of people believe that Tesla is giving in to market pressure, the company is actually not having as many problems as other automakers. Although inflation is beginning to pick up speed, deflation may end up posing a greater threat. Tesla's leadership is a result of its groundbreaking work in electric car development, cutting-edge technology, and luxury and sustainability-focused brand image. The company's cutting-edge electric vehicles have drawn a lot of attention and has grown quickly and attained a high market price. According to Cathie Wood, businesses will probably experience deflation in addition to inflation. She asserts that most businesses, particularly automakers, are unprepared for the effects of deflation, and that 50% of the S&P 500 is vulnerable to creative destruction. If appropriate action is not taken, automakers may experience both terrible deflation and commodity deflation. Automakers with possibly outmoded products may have to sell these commodities at a discount or face significant losses, while companies that invest less in innovation may find it difficult to stay competitive. Automakers may have to drop the price of their vehicles in order to pay production expenses if they are facing commodity deflation, a situation in which stocks exceed demand. This might apply to EV manufacturers who are making a lot of effort to compete with Tesla in the absence of better advances. Cathie Wood has previously voiced concerns regarding deflation. She has issued a warning, stating that the biggest threat to the economy and financial markets in the upcoming years would be deflation rather than inflation. Notwithstanding the anticipated deflation, only businesses with a competitive advantage in innovation can prosper. Here's where Tesla pulls ahead. Tesla is very innovative and has a strong competitive advantage in its business, which could help it get through its deflation problems. Compared to its rivals, Tesla has always had an advantage over inflation, and no other EV firm appears to be catching up. The market already regards Tesla's electric vehicles highly. Global sales of its Model 3 and Model Y are enormous. Based on a recent analysis of auto loan data, these Tesla models rank first among the vehicles that Americans apply for auto loans for. In addition, Tesla is far ahead of many of its rivals in developing a number of intriguing projects, including full self-driving, humanoid robots, semi-trucks, and robo-taxi services. Tesla has an advantage in high-quality innovations because it has gathered significantly more real-world data than its rivals. Innovation is not a problem for Tesla or its investors. Instead, urgent issues such as battery availability have a significant impact on the company's ability to produce goods. Because it created its own AI processor, Tesla's battery technology is at least 3 years ahead of other automakers. Tesla is well on its way to generating enormous profits from its next car models, taxis, and robotics. The automaker's gigafactories are scaling up car manufacturing and delivery. Tesla is clearly in the lead in the EV industry, and given its track record of innovation, it looks like it will stay that way. Cathie Wood, who frequently emphasizes the importance of Tesla's next projects in enhancing its market potential, concurs that Tesla's inventive approach is unrivaled in the EV business. How do you feel? Please share your thoughts in the comments section below, along with your assessment of Tesla. To learn more about Tesla's latest activities, select the following video that appears on your screen. I'll see you there.